Hi, it's Ben Morton at Cohen Steers, head of global listed infrastructure, here to talk to you today about the asset class in general with some specific questions around the outlook. So first, as economies reopen around the world, there are numerous impacts on the infrastructure asset class. When you think about the most economically sensitive subsectors within the asset class, they have been the best performing over the course of 2021. So marine ports, for example, as we've seen economies reopen, we've seen greater throughput volumes at marine ports, and that's translated into those businesses being the best performing within the infrastructure universe from a stock price performance standpoint in 2021. The second best performing subsector has been midstream energy, which frankly is an indirect beneficiary of improving economic conditions as demand for energy and energy commodities has remained strong. That is a good thing for the assets that transport and store these commodities because they are throughput based in terms of their outlook. A second bucket of companies that is impacted by reopening and improving economic conditions is passenger transport, which on a year-to-date basis has really lagged from a performance standpoint. But we have started to see some green shoots in terms of passenger volumes, people returning to airports and flying again. In many parts of the world, although there's quite a bit of dispersion depending on geography, and also toll roads, where toll road traffic in some parts of the world is back to levels that are above 2019. And then, the third bucket I would say is what I describe as pandemic beneficiaries, which are notably the telecom infrastructure companies, which were large outperformers in 2020. And have been decent performers this year, but have lagged a bit of late as we've seen sort of an acceleration of the reopening trade and the inflation beta trade in the broader equity markets. Several key themes are impacting the asset class today. Dry powder and M&A associated with that dry powder, inflation, and fiscal stimulus. First, on the M&A front and private infrastructure dry powder, over $300 billion has been raised. We're seeing that capital getting deployed quickly this year with a record number of deals that are impacting the listed infrastructure asset class. Notably, several deals of late just in the last quarter in Australia for assets like Sydney Airport and Spark Infrastructure. But there have also been numerous deals, dozens of deals in other parts of the world, whether it's for entire infrastructure companies or assets that are sold by listed infrastructure companies to private funds, or stakes in assets that are sold by these companies. So this theme is not going away. That money continues to be raised and it needs to find a home in infrastructure assets. Second, it's inflation. Clearly inflation has been a key theme in the capital markets this year, with inflation likely ahead of most people's expectations. This is a unique feature of the infrastructure asset class, that many businesses can pass through those higher costs associated with inflation to customers, which tends to protect the asset class from a performance standpoint in periods of unexpected inflation. And then lastly, fiscal stimulus. A lot of attention on fiscal stimulus, particularly here in the US right now, with infrastructure-focused stimulus as a catalyst. But we've seen these types of packages in many parts of the world. And what's unique about this round of fiscal stimulus focused on infrastructure is that there are many ways in which it can directly impact infrastructure assets and infrastructure businesses. Most notably, it's through the decarbonization of power generation and the transition to renewables, and the types of financial support mechanisms that are being provided by governments around the world to accelerate that transition to a lower carbon fuel supply. As it relates to our outlook for the asset class, we think 2022 could be an attractive vintage year for infrastructure as we think about several key themes supporting the asset class. First, we think valuations are attractive on average across the asset class as infrastructure is trading in line with broader equities, whereby historically infrastructure is traded at a premium on a cash flow multiple basis. We think several of the trends that I've discussed and will continue to discuss here, such as dry powder, such as the fundamental trends that are benefiting the asset class, as well as relatively attractive monetary policy and accommodative monetary policy, and fiscal policy should again lead infrastructure to trade at a premium. So a couple of those themes to discuss. First, decarbonization and energy transition. Clearly a number of opportunities for us, both in the owners and operators of renewable assets, so companies that own and operate renewable generation like solar and wind, companies like NextEra Energy here in the US, or companies that own transmission assets like E.ON in Germany, who are building transmission and upgrading transmission to support that renewable energy development. Digital transformation of economies is another key theme as societies continue to rely on data and data in a mobile sense and the movement of data around the world. So businesses and governments as well as individuals continue to see exponential growth in data usage. This will benefit cell tower companies who need to densify networks, as well as data centers who, of course, store data, both primary data and backup data. And then a third theme is just the continued strong demand that we see for goods and services. 2021 was very focused on goods and a goods-based economic recovery. We've started to see a transition to services as we've moved through the year. We expect 2022 to be a bit more balanced between goods and services, and some real interesting ways to play both of those in our universe. First, on goods, it continues to be freight railways and marine ports. And as we think about services over time, it will be more of the passenger transportation type businesses like airports and toll roads.